How we going on, people? Luke here from LAGFX. We're back today with a new Sunday Sessions video. Yes, this is the first Sunday Sessions of this year. If you're new to this series, it's basically where we look at a few pairs that we feel hold good potential for the coming week, and we break down and explain some of the analysis we have performed prior to recording the video. Now, this is great for those who are new to Forex and are wanting to learn a little bit more about the strategy that I use to place and execute positions, and it's also good for those who are veterans or experienced traders just wanting a bit of analysis that they can fall back on and apply to their own charts. Now, if you do go on to enjoy this video, don't forget to leave it a thumbs up. As always, the support you guys provide on a week-to-week basis is very much appreciated. And if you have any feedback with regards to the video today, then be sure to leave them in the comments below. Now, there's a few pairs that we're going to be going over today. The first one that we're going to be touching base on is the Great British Pound to the US dollar. I'm going to speak about the analysis that I've done already and my bias for the coming week. So you can see that we have the Great British Pound to the US dollar market on screen at the moment. Price has, as of recently, traded us into a higher time frame supply zone. This supply zone has introduced enough supply to give us a break of structure to the downside. So those two things coincide with one another and tell us that price could potentially be looking to trade us lower with a longer term bias. The break of structure tells us that we are no longer following the laws of bullishness and we are now following the laws of bearish structure. As we know, in bearish structure, we break the lows and we protect the highs. So by breaking the lows, as we have done here, we are following the laws of bearishness. Now, you can see that price is currently within a corrective phase. We are seeing price put in bullish structure fractally within this new trend. So because of that, it is good to look at areas at which price can trade up to set the first initial lower high before going on to take that next impulsive wave that trades us lower. Now, by finding areas of supply, we can obviously use that as leverage and somewhere that we can get involved in short positions from. As this is a new bearish trend that's going to be trading us lower, we obviously want to find areas of supply to get introduced in those short positions. So you can see here that I have marked out what is a hidden order block on the 4-hour time frames. This order block here is hidden because it's not a clear green candle that's presenting itself within a bearish leg that's taken us lower. What's showing is a wick to the downside followed by a wick to the upside. So we understand that within this, there must have been bullishness present in order to create this wick to the downside followed by the wick to the upside. Now, as we go down on the time frames, so looking at the 1 hour, you can see that the order block actually presents itself to us. Now, this is great as this, as I said earlier, gives us an area to get introduced in short positions from. What we'll be wanting to see is for price to trade up and into this area of supply, for enough supply to then be introduced to give us that break of structure again, and then we can obviously look at getting involved in those short positions. Once we are delivered of the break of structure, we look at the impulsive wave that broke the structure, which would be this one here. We find another order block for price to trade up and into, and this is where we'll be executing our positions from, trading price lower in that next impulsive wave. Now, you'll notice that we are simply following the same steps over and over and over again. Price traded up and into a supply zone. We waited for price to break structure. Price pulls back to create a lower high. We get introduced. The same happens here. Price trades in, breaks structure to the downside, pulls back. We get involved just more fractally. So that is my analysis for the Great British Pound to the US dollar. Definitely looking for short positions. I've got this area marked out as an area we can look to go short from. So if you guys haven't done already, pause the video now and mark this out for yourself. Go ahead and set an alert as soon as price trades in. Look at the last protected low within the bullishness that's traded us up. Wait for price to break that low. Once it's broken that low, we can obviously look to then get involved in short positions. Okay, now moving over to the XAU USD market. This is another market I'm looking to go short from. You can see here that we caught the break of structure to the downside after penetrating the supply zone. I was hoping that price would quickly come to trade into this area of supply and give us the opportunity to get involved in those short positions. However, price never came to trade us back up. Price continued to trade us lower, creating new lower lows and lower highs. What we are seeing now after fundamentals on Friday, the NFP, we are seeing that price is actually beginning to trade us higher. Now, what I've done is I have marked out a few areas of supply. So you can see this is the main one that I wanted to go short from. We've also got this one here. Price has just traded into a fractal area of supply, and we've seen great rejection to the downside. So what I've also gone ahead and done is marked out a few more fractal areas just in case price wants to trade into these and reject to the downside. We can definitely look to go short based on a penetration rejection, but we just need to ensure that we've got enough confluence to obviously get involved. So I would like to see price trade up and into these higher time frame supply zones. I'll be completely honest with you. This gives us the opportunity to take full advantage of an entire swing that drives price lower, and in return obviously gives us greater risk reward ratios based on the positions that we place. But there are two zones here fractally which I do believe price will probably trade up and into, and we will see rejection from. So it's important that we get these marked out as well, and we sit on our hands and wait patiently for price to trade into these areas. Once we are delivered with the confirmation we need, that's when we can obviously look to place those short positions. So I've gone ahead and marked out these two zones for you all. If you want to pause the video now and mark them out for yourself, you'll actually see the order blocks on the 5-minute time frames. You can see this green candle here, and then we've got the wick to the downside followed by the wick to the upside on this one here. So we want to see price continue to trade us higher in this bullish way, trade us into an area of interest, break structure to the downside. That tells us that this bullish correction has finished. We can then look for an order block fractally from the impulsive wave that broke the structure, wait for price to trade into it. Once it's traded in, that's when we get involved in those short positions. Now, when it comes to placing our stop loss and take profits, I'd be more than happy to set my stop loss just above the zone we get involved from, and then we can set our take profit probably at the last swing low, which would be this one here. And as you can see, we walk away with a great 1 to 12 risk reward ratio. So that's my analysis for the XAU USD market. Definitely looking to go bearish, definitely looking for those short opportunities. We just want to see price trade into a area of interest, deliver us with the confirmation we need in order to go ahead and place those positions. So if you haven't done, pause the video now and go ahead and mark these zones out for yourself. Okay, moving over to the NASDAQ. This is another pair that I actually really enjoy trading. This is also another pair that I feel price will trade lower over the course of the coming weeks and months. You can see here that price has broken structure to the downside on the 1-day timeframes, and we are yet to see price put in that corrective wave. Earlier on this week, I was actually suggesting that price went long from this area here. However, price continued to trade us lower based on the NFP news on Friday. So I feel as though now, coming into this new week, we will see this bullishness being introduced, and from there we can anticipate and expect price to trade up and into this supply zone that I've got marked out before obviously taking us lower in this market. So you can see here I've drawn out an actual position that we could place should the market trade us into this area, and you can see that we could walk away with an amazing risk reward ratio of a 1 to 15. So if we just go down on the time frames, we could also look to actually go long in this market before we go short, so we could take full advantage of both the correction as well as the impulse that follows. So what we want to see is we want to see structure break to the upside. This would tell us that this initial impulsive wave has finished and the corrective wave is underway. Once we've been delivered with that, we would simply wait for price to pull back, create that first higher low, and that's obviously where we can look to get involved from. Now, where do we know price is going to set higher low at? When we look at the market, we should look at the impulsive wave that broke the structure to the upside, find any areas that may have been left unmitigated, any order blocks that could be left over in this market, and that is where we would be waiting to see price driving into to grab any remaining demand in order to continue that momentum to trade us up and into the supply zone here. So you can see that this would actually be considered an order block. Price has come to trade perfectly into this. So I'm expecting on the open that price should continue to drive us higher. we should then be delivered with that break of structure. That's when we would see price pull back, and obviously we would then look to get involved in that next impulsive wave. So come the open, I would be looking for bullish opportunities. That is, if you wanted to be slightly preemptive, as we obviously haven't been delivered with a higher time frame break of structure as of yet. But what we are seeing is the introduction of bullishness, and we are seeing that the demand is being respected over the supply. So that tells us the balance is flipped. Now, if we want that security and we want to wait for as much confluence as possible, then we will be needing to wait for this break of structure in order to look to go long in this market before we obviously head short. Now, just going back to the daily timeframes, you can see here that I have marked this wick to the downside followed by the wick to the upside. What does that tell us? That tells us that bullishness was present. Why? Because in order for price to trade from here to here, there must have been bullishness that's traded price up in that manner. So that is why I've highlighted this out as an order block and a point of interest to go short from. But ultimately, we are waiting for further confirmation that this bullish correction is underway. We can look to go long, trade price up and into this area of supply, and then look to go short, assuming that S&D balance flips to the downside, creating this new bearish leg taking us lower. So looking here, you can see how we got involved in short positions last time based on the same strategy that we are using to predict future price movements. So you can see here that this would be the last protected low within this bullishness, as this created the highest high. We had a break of structure that was presented to us here. Price came down to create a new lower low. We then wanted to find an area of interest within this impulsive wave that's broken structure to the downside in order for price to trade up and into. Now, if we look here, we can see that there would have been bullishness present where these wicks lay. Now, if we drag this across, you can see that price traded perfectly up and into this. We then obviously zoomed in, went down on the time frames, waited for a break of structure here fractally, and then obviously got involved in those shorts. And you can see that we took full advantage of this market and traded price lower. Now we are simply wanting to replicate the exact same thing with the market here. We just need to wait for price to trade up and into this zone so we can obviously get involved. But that's my analysis for the NASDAQ, and those are my thoughts for the coming week. Okay, now finally touching base on the US dollar to the Canadian dollar. This is another market that I do see going short. I do, however, want to see price put in this large move to the upside in order to trade us into this area of interest before taking us lower. But this market has actually been short for some time now. If we just head to the higher time frames and zoom out ever so slightly, you can see here that we have been delivered with clear bearish structure since trading into this area of interest on the extreme higher time frames. As we know, with every impulse comes a corrective wave. So you can see here that there is a lot of inefficient structure that I feel needs clearing, and there is a clear order block here that price could come to trade up and into in order to grab more supply to allow price to trade us lower. Now, if we just head over to the daily time frames, you can see here how price has traded into this higher time frame area of interest, and we can see how price looks to almost be distributing on the daily time frame. So I am expecting a full reversal to the downside, and I would actually like to see a break in these protected lows that we can see here. Now, if we go to the weekly time frames, you can see that this is actually a bearish market. It may not look like it, and it may seem as though it's ranging to an extent, but you can see that this low here actually came lower than the last, so we want to kind of see that pattern continue. Now, if we just head back down to the hourly time frames, I'm just going to zoom in here and show you the order block that I've highlighted. So it is this here. I'd love to see price trade up and into this. Probably visible more on the 4 hours. Yep, as you can see, got a clear order block there. I want to see price continue to trade us higher, take us up and into this, for supply to be introduced, demand to be offloaded, and then obviously we can get involved in those bearish positions. Now, before we look to go short in this market, can we look for bullish opportunities? Absolutely. What we need to be doing is we need to be finding any areas of interest that price may trade back down and into in order to trade us higher. Now, there's one here that I've found, and I'd love to see price trade down and into this before taking that next impulsive wave higher. Now, this is great because this gives us the opportunity to take part in intraday trades, and we can take part in this market before we look to take part in the higher time frame swing that takes us lower. So what I'm going to do is I'm going to mark this out for you all now. You guys can go ahead and mark this out in your own charts. It's on the 1 hour time frames. We want to see price trade down and into this for structure to break to the upside fractally. That gives us the confluence that price has finished the correction and is ready to put in that next impulsive wave within this higher time frame corrective wave. Okay, so there is the area in price. As I said, we want to see price trade down, price to then trade back up, breaking structure. We can obviously look to get involved and then trade price higher. And if we just zoom out and we draw a path, you can see how everything actually correlates with one another. So by price trading like this, we are seeing price complete its corrective wave on the extreme higher time frames. Then we want to see enough supply to be introduced and enough demand to be offloaded in order to flip the S&D balance. And then we would simply look to get involved in those bearish positions that follow. Now, when we look at this, you can see how the fractal structure, being this here, coincides with the higher time frame structure, which would just be this here. So impulse, correction, impulse. Everything coincides with one another, and this is exactly what we want to see in order to reassure that the analysis we have completed has the highest probability of working out and playing out as we want it to. So that is my analysis for the US dollar CAD. Definitely looking for short positions with a higher time frame bias. However, price is well within a bullish corrective wave, so we want to be looking for those bullish opportunities to take advantage of this bullish correction before preparing for those short opportunities later on in the trading month. Okay, so that is going to actually conclude today's Sunday sessions video. I hope you guys have enjoyed. We've gone over a few pairs here. I've given you guys some zones and areas that you can work with. If you have any queries or any questions with regards to the analysis I've gone through today, please leave them in the comments below. I'll get back to you as soon as possible. If you aren't involved in the Learning Lounge group chat or any of the VIP services that we offer, I would highly recommend getting involved, whether you are new to Forex or whether you're advanced within your Forex journey. There is always something that can be catered to you. If you want to message me directly, go ahead and join our Learning Lounge group chat, and you'll find my Telegram username on there. I'm more than happy to liaise with anyone with regards to Forex. Just drop me a message. Now I want to take this time to say a massive thank you guys for watching, and I'll catch you all in the next YouTube video.